If you're joining us for the first time today, welcome to the 8th Annual Hispanic Heritage Foundation Investors Forum. To those that have been with us all day, hey, it's about to be the culminating moment. So we want to thank the opportunity to address again our sponsor, TIAA Institute, for their continued support. Up we have the Fireside chat on creating a firm. Joining us, we have three amazing Latinas doing extraordinary work in the industry, and we'll share what it takes to build a firm and how we can support others. Thank you for joining us. We have Monica Mantilla, President and CEO of Altura Capital, co-founder and managing partner, Small Business Community Capital. Samara Mejia Hernandez, founding partner of Chingona Ventures. Stacy Olivares, board member of CallPers. Ladies, this is your moment. Thank you for joining us.
Good afternoon. It's great to be here.
So excited you are both here. And I know there are a lot of people who want to hear about your journeys. And so I've been there for Monica's.
Yes,
Samara, I haven't been there for yours. So let's start with you. I'd love to hear about your journey in starting a fund.
Yeah. So absolutely. So I guess a quick background on me, which I think relates to the audience, is that I was born in Mexico. I came to the US at a young age. So I was an immigrant to this country, like many Latinos here, and grew up in a dual language, multicultural, low income household. So that's the lens I've always brought to my investing and professional style. But I picked up math quicker than I picked up English. And so that led me to study engineering at the University of Michigan. So I'm an engineer by training. And then I spent nearly a decade at Goldman Sachs in the public markets. And then after business school, I transitioned into the private markets. So I was part of a local venture fund here in Chicago for Fund 1 and Fund 2. And then I realized some huge opportunities in the market, an opportunity to go in earlier, an opportunity to go into industries that were massively growing, but often not undercapitalized, and an opportunity to go with next generation founding teams. And so I launched Chingona Ventures in April of 2019. We've now made 24 investments in 26 months. So we're very active, about one deal per month. And we've built out our team and invested all out of Chicago.
And I love the name, I have to say, Chingona Ventures.
Yes.
Thank you. I'm investing, founders that are often overlooked. And so I had to have a name where if there's an imposter syndrome that we have, whether it's on the team or in my founders, we just have to have a name to pump us up and get us going.
Yes, that's great.
That's great. Monica, you want to go through your path?
Thank you, Stacy. Well, it's wonderful to be here. And I just want to take a moment to tell everyone, you know what, this is the time for us now to relax a little bit together. It's been a beautiful day. I have been so proud, so excited to hear the incredible intellectual caliber that our community has in every asset class, right? So thank you to the trustees. Thank you to the investors, both LPs and GPs, and every stakeholder that has been part of this conversation. It's just a wonderful pleasure to hear such amazing talent, and we learn from each other and can help each other and should help each other. And I think that's a little bit about the conversation we have at the end, right? About, what our journeys has been and what is ahead, very importantly, right? How can we continue to collaborate so that maximization of human capital talent, of not only the Latino talent, but the talent across the country can really be maximized and be heard, and all the investment wisdom that we carry in our community that can find its way with institutional investors supporting those trajectories. So a little bit about my journey. We started Altura back in 2005. It's been a journey that has always had impact in place and has always had diversity and the goal of satisfying the needs of institutional investors in these segments. And we started a journey as advisors in institutional investing in emerging managers. And then in 2010, we understood that there was also a need in the market to serve small businesses and diverse businesses that needed the capital and the strategic resources to grow. And so we began to develop solutions, and we developed a fund that was an SBIC fund. We were one of the first Hispanic funds to have a license with the SBIC program. And the whole premise behind the fund, and we targeted to raise 120, we raised 147 million, and the whole idea was to accompany business owners and entrepreneurs in their growth journey, and to be able to provide not only capital but also the strategic resources, the right ecosystem, the door to corporate America, so that they could, double or triple their EBITDA. And we were working in a segment that was probably the 1% of the Hispanic business community, or the 1% of that universe of diverse businesses, because they were businesses that were, north of $1 million or north of 2 million in EBITDA. But certainly there is an incredible market potential there that we continue to explore. And it's been a journey that, in my estimation, gives me the privilege of not only creating a solid investment firm, but also delivering impact. And we have a commitment in the way we invest, that we have a very specific three-pronged commitment of deploying at least 51% of our capital in low and moderate income communities, deploying at least 51% of our capital with diverse business owners, and creating high quality jobs. And we've been fortunate to deliver both strong financial returns and impact returns, and continue in this journey, right, of continued collaboration. I think the historical time we're living now is a fascinating one. And I'll stop there, Stacy, and thank you for the question.
Mara, can you talk about some of the challenges that you faced in starting your own fund? I think this will help some of our audience members understand what it takes and how they should prepare.
Yeah, and so when I went to go launch the fund, I mean, this was prior to, I think now, there's a lot of funds, a lot more funds being raised. There's a lot of different types of funds. There's rolling funds. There's funds where you can solicit publicly. And so it essentially allowed many non-traditional investors to come into the market, which is great. At the time when I started the fund, there was none of that. And I was trying to do that all out of the Midwest, and being a sole GP with zero high net worth network was absolutely a challenge. And many times, I think what some might not realize is that you're fundraising for 2 years plus, especially with your first fund. And many people that started their own first funds relied on their network. And so for me, it was very difficult not having that, and potentially going in without a salary for 2 years. And of course, if you have a financial cushion, you can do that, but not many of us do. And so I was in a very fortunate position where my anchor LP was light years ahead of its time. And he actually spoke today in the conference, but he was doing this before any movement, before anybody else was doing this. It's an institutional LP who said, we need to think differently about how we invest, right? So many times they didn't invest in first-time fund managers. I wasn't a first-time investor. I was a first-time investor into the thesis that I had. And so they created a system internally where they can invest in fund managers like me. And there was another one that went through the kind of the pilot program. They put a significant check, and they set you up from the structure of the fund to the support that they gave you. They set you up for success so that you can prove out your thesis and get to that next stage. And so without them, I would not have been able to raise my fund one. And now I see a lot of programs doing it, which is great. I think it's going to allow a lot more non-traditional investors, or investors that don't have a high net worth or a network or 2 years to go without salary to launch a fund. So that was, I think, the biggest challenge. I would say in general, being a woman, a Latina, I fundraised my last fund while I was pregnant, not on purpose, but it happened, and I wouldn't recommend it for anybody, but it's what happened. And I had a great legal team that in the process I had the baby and they kind of helped push the deal forward. But I think there's a lot of people that don't realize some of this other personal stuff, especially during COVID. So I raised my second fund during COVID, and being a mom and trying to balance the two. I think that was an extra challenge that, again, many people don't realize. But why I bring all this up is because I also leverage those learnings, those personal learnings, in what I invested in, the founders that I invest in. So I think we've all seen the reports of women solo founders have the amount of venture funding that's gone to them is at a 3-year low. And, although we're seeing all these record financings and these record valuations, females are actually struggling and not getting the funding that they, especially Latinas in particular. And so for me, I'm like, I need to change my process. I need to change my outbound sourcing efforts. If I have to, meet somebody at night when their kids are asleep, I will do that, right? So thinking through that very differently so that this industry can look very different and we can invest in non-traditional investors and non-traditional founders.
Those are great points. And I think that we should get to that a little bit more in depth later when we're talking about how we can support each other, which Monica also alluded to, how we expand those networks, and then how we look at the entire spectrum of capital, from everything from the earliest stage to the big LPs, right? And so that we have access to all of those and that we're able to identify best practices and expand those. Monica, you want to talk about some of your challenges?
It's a journey that comprises many things, right? I would say similar to what Tamara was describing, one of the challenges in raising and developing a fund is while you do that, you might not be paid, right? We actually had the good fortune of having a business platform that from there we were able to then launch investment vehicles, and that certainly gave us a runway that sometimes is such a challenge, right? Because people are going to give that step and it will take a while, 12 months, 18 months, 24 months to do that first raise. I think that we are all the result of formidable institutional investors that have believed in us and that have entrusted their assets in us because they believe in our ability to deliver. And it begins with a bet, right? It begins with, I believe in you, I'm going to give you this opportunity. And it's also bringing to the table, I think from day one, a team with all the right elements, right? You need to have the track record, you need to have the opportunity set, you need to present yourself in a market in a way so that you are sellable, right? That it's an investment thesis and a team that has the elements to be sellable. And I think that the key thing is to sustain yourself with strong investment results. And in our case, and the case of many who are also impact investors or ESG investors, we're also driven by financial results and impact results, right? And it's very much relationship driven, I would say, because when you begin to develop those relationships, you begin to have intimate conversations about their future, about your future, about the market you're serving, about why you're serving it, and how you're going to go into your next approach. And so I would say, building relationships is at the essence of everything we do. And I would translate those same dynamics in the institutional world to the world of entrepreneurs, right? Because we are every day opening ourselves to fantastic entrepreneurs that we want to approach. And some of them, we might not win, right? Some of them, there might be a deal that goes to someone else because of price or because of other dynamics. And so I think that road of becoming very competitive in the deal world so that they come to you and they see your value add is also a very, interesting and a very important part of the journey, right? To be positioned in a way. We say that when a deal comes to us from 2 or 3 places, where there's a lawyer who's referring it and there's an accountant who's doing that and the entrepreneur reaches you, it's because, it's a validator that you are, a relevant player in the segment. And it takes time to develop those relationships. It takes marketing investments. It takes, being present in many ecosystems. So resources and teams to develop that market presence. And I would say, the building of a team to be able to scale firms is also, an essential component for success, right? Because we are in businesses where teams are everything. They're the ones executing on every, core aspect of the business. And so it's so many facets that I find fascinating. And for us, again, in our strategy, the element of how we work with communities is such an important one, right? And such a fascinating one, working with, organizations that dedicate themselves to building Hispanic businesses or African American businesses or women businesses, and getting to educate a lot along the way, right? About acquisitions, about transition opportunities, about potential divestitures. And I would say then the other element in our space that has always also been part of that, building, is the relationships with corporate America, because they are the key clients of the companies that we're investing in. And so they have a history of supplier diversity, which I think in this historical moment, we're actually living a very interesting transformation. And we're trying to accelerate that transformation, because the more, and that has been very connected to the ESG movement and the ESG evolution. The S and the G are the supplier diversity efforts are very much a part of the S and the G, and that has accelerated those dynamics, because I share it as an obstacle and at the same time an opportunity, because it hasn't been historically so easy to engage with these corporations, right? But I see, frankly, in just the last year, with all the racial equity conversations happening, with ESG accelerating, with impact accelerating, that there is, more and more opportunity to work with these corporations. So it's a quilt, right, of all these elements that I think what we have to continue to be is very, systematic about addressing our market opportunities, our team building, our developing of institutional relationships, of corporate relationships, and nurturing the ecosystems we're part of, because there's industry associations, stakeholders that are also, very relevant to our businesses. I think it's very much a nurturing ecosystems ultimately, and all the key stakeholders that are part of it.
Well, that's a great transition into what I was going to ask Samara. So thank you. Samara, what institutional supports or structures are needed for new firms? Or what barriers need to be removed? And I think about this for all of those that are watching this right now, for those that will watch this. I think often there's a disconnect with large institutional investors and those new founders.
Yeah, I guess I could talk about it from a fund manager perspective, and also how I try to think about it when I look at founders. So we've been very intentional about having our process be standardized and be the same, whether someone here sends me a deal, whether a close friend sends me a deal, or someone random on Twitter finds me. And they all go to the same site, they all go to the same Airtable form, fill out the same information. And then it goes through our process. And the reason why that is because relationships is what's been driven a lot of investments in companies. And they're done by investors that look the same from their network, and they invest in their network and that looks the same. And so being very intentional about saying, we have a network. I don't care who you are, whether you're white or non-white or female, like I have a network of Latinas from Michigan, Midwest, Northwestern, right? That's my network. And so to go beyond that network, you have to be very intentional about having other people come find you, whether or not they're in your network. And so we're very public about that. And then our process then is very standardized at the risk of not sounding robotic, but that way we can process deals quicker. We can try to remove as much bias early on, because we all have biases, and ask the same questions. As we know, women get asked the very different questions than men. There's a ton of studies on this. And so removing that throughout the process, and then encouraging people to talk about these biases. So I typically have, men and women on the team. I have one man on the team today. And, he's often like, well, I can't look at a female technology deal because I'm not the customer. I'm like, you can absolutely look at it. You can take the time to figure it out. And so how that relates to, I think on the LP side is that, what I've seen personally is that there's a lot of initiatives. Everyone puts their initiatives out of like, we're going to commit to women and minority fund managers. And then you need like 12 introductions to get to them, or you can't find someone right to connect you. And like, okay, well, and then you see everybody on the investment team, it's all male. And it's like, okay, well, if you want diversity, you need to have diversity on your investing team making the decisions. You need to have people that are not in your networks be able to find you. And you have to have a process that everybody can do. And so I'm going to give, one example is PayPal Ventures. They were the first to commit to Fund 2 last year, and they made a big announcement. And then immediately on their website, it was public. Literally anybody can apply. Everybody that applied, and they all went through the same process. They were extremely transparent throughout the entire process. They did not ghost. They did not whatever. They were communicative, and they committed. They were the first ones to commit. And so fund managers experience the same things as many times founders. We get ghosted. We don't get honest feedback. We can't find these institutions, and it's very hard. So look, you don't have to if you don't. If you can obviously as an LP have your own fund process and whatever it is, but if you're very intentional about investing and you're public about investing in women and minorities, especially those that are that are not traditional or not in your network, then you have to create a process around it. And you have to create a team and be very intentional about your outbound efforts. And so that's, I guess, one step. And maybe I can go on and on about that, but I think that's the biggest thing that we can change today.
Thank you. Monica?
No, I very much relate to what Tamara's saying, and entirely agree with her. And I dream about like organizations like the Hispanic Heritage Foundation or NAA or NAIC. I think that the challenge we have ahead is demand and supply matching, right? So it's the most efficient way possible. And we can have a way to understand who are all the LPs that are out there, what do they invest in, and have the most efficient way to connect all of our great investment talent with that. And as Samara was describing, it's never a straight line, right? We wish we could just like go into a database and say, oh, well, here's this 100 investors that invest in what you invest, and you send them a deck and they react. We know that road is very long. There's lots of gatekeepers. Sometimes when we hear a certain gatekeeper name, we know that we won't even try, because we ask ourselves how many of firms like ours have gone through their gates, and we know that the numbers are very low, right? And so I think it's this. When I hear in these panels of today, and I feel so encouraged by many institutional investors that are pushing, like you, Stacy, and in your board, right? Like Cynthia with lasers, like Rodrigo, that you're really caring about creating an institutional process, lending your name for hey, I want to introduce you. It takes a little bit of effort to be able to make those connections and make them meaningful in such a way so that there truly is the good opportunity to be able to be vetted and truly vetted, that it's not, just send me all your information and I'll keep you giving circles for 6 months or 12 months. And there's really never an intention or like a clarity of process. But again, like I only have gratefulness for the institutional investors that, when I think about the investors we have today, some of which have come in and doubled and tripled in our next vehicles, I really commend many of these institutional investors that care about investing with financial returns and also opening up to diversity and new market opportunities. And there are many out there that I think are a fine example of being incredibly proactive and caring and being hand holders, right? There's many fund of funds in the market, people like Grosvenor Capital that have a very good process of being out there in the market and selecting funds, and their vetting can be extremely rigorous, right? But there is a way for them to gather assets and then bring them to the emerging managers market. So I think that we just have to continue to push on efficiencies and provide our industry organizations the ability to continue to be efficient gatekeepers, right? So that the supply and demand of capital continues to meet in the most effective way.
Thank you. I couldn't agree more. And I know we just have a few minutes left. I did want to say with every challenge is an opportunity, right? And so we have an opportunity to create a business out of this that would allow us to connect our networks in different ways. So it's an exponential effect. There are also new tech solutions too on the due diligence side where you can track how much time somebody is spending in your data room. And I think that becomes really important when fiduciaries are held accountable. Are they looking at the entire market for deals? Are they really getting alpha where they should be? Or are they just spending most of their time on a narrow subset of funds? I think that trustees can hold their teams accountable in that space too, when they're looking at how investment policy is formed. We're all in this together. And then maybe we could at some point later open this up to talk about partnerships and how we structure these. And so I'm on LinkedIn, happy to chat with anybody about this, but it has been incredibly encouraging to see so many Latinas in this investor forum more than ever before. I mean, it's just so exciting. But that means there's so much more we can do, right? The more capital we aggregate, the more capital we deploy, and the more we help diverse communities.
Yes, absolutely.
And I was going to say, it's an exponential effect, right? You invest in, I see it in my portfolio, you invest in women, you invest in minorities, they bring on other women, other minorities, right? It's a multiplier effect. And so you're not just doing it for one, you're doing it for multiple people.
Yes. And one thing that I see that is super exciting in my mind is that because of the impact of ESG in the institutional market, there are now a whole breed of corporations that are asking themselves questions that they didn't ask themselves before. And so there's this domino effect of the institutional market into the corporate market. And in our way of doing business, and I think that this very much resonates with the diverse business community, corporate America plays a fundamental role. And there's two big roles corporate America can play, in my estimation. One is to be an investor. And we all know that diversity has not arrived to investment departments in corporate America. And it's growing and it's changing, but there's still so much that can be done there. And I think that ESG can play a fundamental role to begin to ask the questions, right, about diversity and the management of investments. And then the other side is corporate America has the opportunity to elevate supplier diversity in a big way, so that it's just not one head of supplier diversity and it's sort of a check the box compliance. It's really a fantastic team with all the right resources, the connection to the business. So it's not only just thinking about supplier diversity as a checkbox, it's thinking about supplier diversity as meaningful partnerships with diverse business owners. And if we just look at the 28 largest corporations in America, and we've been working with them for the last 10 years through the $1 Billion Roundtable, where we've been a capital advisor, the market opportunity that resides there with just those 28 corporations is estimated at $590 billion that can be created in market value if those corporations were to harness and maximize the potential that exists in diverse communities. So I think we're actually at the opening and the gate of a formidable market opportunity that institutional investors are fueling. and the domino effect with corporations, and then the benefits that that will have with our diverse business owners. And there's a whole cycle that hopefully will have a very transformational effect in our communities. So I think we're on the right track. We just need to continue to accelerate, continue to build ecosystems, and get to know each other, right? Because sometimes we might have an opportunity to co-invest, but sometimes, you know, Samara might invest in a deal that then we can invest in after, right? And so it's like that continuing to be understanding of the capital continuum and where we can continue to collaborate with each other so that we can support diverse business owners and ultimately create the opportunities that this country has at hand, and that we have in all of us the challenge to maximize and seize.
Well, thank you so much, Samara, and thank you, Monica. Wonderful insight. I look forward to continuing this conversation and all the work we'll do together.
Awesome. Thank you, ladies. Stacy, thank you. We've reached that moment. And so it's the end of this year's 8th annual Hispanic Heritage Foundation Investors Forum. We close with a very high note of collaboration, obviously. So thank you for that. But before we end, I would like to invite Emmanuel Pleites, chairman of the Hispanic Heritage Foundation, to give the closing remarks. Thank you again for inviting me, HHF team. And Emmanuel, thank you.
Marta, thank you so much. We got to book you for next year. Get ready.
Yes,
and next year, hopefully in person. Thank you all who made it to the very end here. What an amazing conversation. 3 Latinas who are leading the industry from the allocator side, the private equity, private credit side, and venture worlds. Amazing panels. Just want to say one last thank you to Marta Hernandez for emceeing for the 3rd year, all the panelists and moderators who, you know, whatever the numbers were at the end of the day in terms of attendance, the quality was really, really high, and the content is amazing, and the content just doesn't die right now. It's going to live on YouTube. This is amazing content for the rest of our community, which we'll be pushing out to the tens of thousands of folks on our email list. Thank you to the sponsors, TIAA Institute, first and foremost, Barnes & Thornburg, Isos Capital, Act One Ventures, Adelante Capital, Altura Capital, Small Business Community Capital, Made Boss, and Diversity Writers, which you heard about from Alejandro Guerrero and Act One Ventures. We'll be sharing links to the recordings of each of the panels after today, once we get them ready to post publicly. And we look forward to seeing you in person, hopefully, next year. Thank you all.